Bitcoin hits new highs. Is it a pump or a sustainable rally? A pump in the cryptocurrency market typically refers to a sudden and significant increase in the price of a particular cryptocurrency, often caused by market speculation and hype. These pumps are often short-lived and unsustainable, with the price quickly dropping back down to previous levels once the hype dies down. On the other hand, a sustainable rally is a more gradual and stable increase in price, usually driven by fundamental factors such as increasing adoption, positive news, or developments in the underlying technology. These rallies are typically more sustainable and less prone to sudden drops in price. In the case of Bitcoin's recent price increase, some experts believe that it may be a temporary pump driven by market hype and speculation. However, others point to the increasing institutional adoption of Bitcoin, positive news around the cryptocurrency market, and the growing interest in digital assets as evidence that this could be a sustainable rally. Ultimately, it's difficult to predict with certainty whether Bitcoin's recent price increase is a pump or a sustainable rally. However, by paying attention to both the fundamental factors driving the price increase and the broader market sentiment and volatility, investors can make more informed decisions about whether to buy, hold, or sell their cryptocurrency holdings. 1. What is a pump in the cryptocurrency market? A pump refers to a sudden and significant increase in the price of a particular cryptocurrency. These pumps are often driven by market speculation and hype and are typically short-lived and unsustainable. In some cases, they may be driven by coordinated efforts among investors to drive up the price and then sell their holdings at a profit. 2. What is a sustainable rally in the cryptocurrency market? A sustainable rally is a more gradual and stable increase in the price of a particular cryptocurrency. These rallies are typically driven by fundamental factors such as increasing adoption, positive news, or developments in the underlying technology. Unlike pumps, sustainable rallies are often more sustainable and less prone to sudden drops in price. 3. Is Bitcoin's recent price increase a pump or a sustainable rally? There is ongoing debate among experts and investors about whether Bitcoin's recent price increase is a pump or a sustainable rally. Some argue that the increase is primarily driven by market hype and speculation, with little underlying value to support the price increase. Others point to the growing institutional adoption of Bitcoin, positive news around the cryptocurrency market, and the increasing interest in digital assets as evidence that this could be a sustainable rally. 4. What factors should investors consider when evaluating Bitcoin's price movements? When evaluating whether Bitcoin's price increase is a pump or a sustainable rally, investors should consider a range of factors, including fundamental factors such as adoption, technological developments, and the overall health of the cryptocurrency market. Broader market sentiment and volatility, including factors such as regulatory changes, geopolitical developments, and global economic trends. The role of institutional investors and other large players in the market, including their potential impact on price movements. The potential risks and rewards of investing in cryptocurrency, including the inherent volatility of the market and the potential for fraud and security risks. By carefully evaluating these and other factors, investors can make more informed decisions about whether to buy, hold, or sell their cryptocurrency holdings, and potentially take advantage of opportunities in the market. Some experts believe that the recent surge in Bitcoin's price is just a temporary pump caused by market speculation and hype. They argue that there isn't enough fundamental value to support such a rapid increase in price, and that once the hype dies down, the price will come crashing back down to earth. Others point to the increasing institutional adoption of Bitcoin, positive news around the cryptocurrency market, and the growing interest in digital assets as evidence that this could be a sustainable rally. By carefully evaluating these and other factors, investors can make more informed decisions about whether to buy, hold, or sell their cryptocurrency holdings, and potentially take advantage of opportunities in the market. DCA breakout last preceded 640% BTC price upside. The latest Bitcoin metric to flip bullish on long time frames, the DCA indicator is even getting attention from major Bitcoin investment circles. Its buy signals are rare, with Sarot seeing just 3 throughout Bitcoin's history, each precluding serious BTC price upside. Today marks the 4th time this signal is suggesting a raging bull market, he wrote in comments, describing the event as the mother of all BTC bullish signals. DCA refers to an investment strategy whereby a buyer allocates a fixed amount of capital to gain exposure to an asset at set intervals. This could be buying $10 per week in Bitcoin, with the concept regularly touted as an optimal way of gaining exposure to volatile cryptocurrencies. The DCA indicator measures the relative profitability of a hypothetical DCA strategy involving $1 buys per day for a year. Once it crosses into profitable territory, marked as 365 on its scale, major bull markets have historically begun, Sorot argues. An exception appears to be mid-2022 when a move above the 365 mark subsequently reversed, and BTC/USD started its journey to multi-year lows near $15,600. Nonetheless, amid an atmosphere of increasing faith in Bitcoin's 2023 recovery enduring, others were also willing to give the latest breakout the benefit of the doubt. Flows into Bitcoin. Bitcoin's price on Thursday sat at its highest level since mid-August 2022. Last year, nearly $1.4 trillion was wiped off the crypto market after turmoil which saw bankruptcies, failures of projects and companies. All that was topped off by the collapse of major exchange FTX. Yuya Hasegawa, an analyst at Japanese crypto firm Bitbank, said there is a shift from so-called altcoins, or alternative coins, to Bitcoin in the wake of the regulatory action. Wednesday's crypto rally was a bit of a surprise, but one thing stood out: it was led by Bitcoin, Hasegawa told CNBC. The current regulatory environment surely looks like a headwind for the crypto market, but it seems like some money is moving from altcoins to Bitcoin, since Bitcoin is the only cryptocurrency that is labeled commodity by the SEC chair. Consequently, Bitcoin's market dominance is on the rise. Gary Gensler, chair of the SEC, reiterated last year that the agency views Bitcoin as a commodity rather than a security. Commodities are assets like gold, whereas stocks are considered securities. They are regulated differently. Rising interest rates from the Federal Reserve, designed to fight inflation, also weighed on crypto markets. Bitcoin is also closely correlated to equity markets, and in particular, the tech-heavy Nasdaq index. The Nasdaq is up about 16% year-to-date. Bitcoin has outperformed the index and is up 49% this year. Bullish sentiment in risk assets has been aided by a view that the economic downturn might not be as bad as expected, and the Fed might slow down the pace of interest rate hikes. Bears might benefit from the impact of regulation. Bitcoin bulls need to push the price above $23,000 on February 17 to secure a potential $155 million profit. On the other hand, the bears' best-case scenario requires a 3.5% dump below $22,000 to maximize their gains. Considering the negative pressure from regulators, bears have good odds of flipping the table and avoiding a loss of $60 million or larger on February 17. More importantly, looking at a broader time frame, there is little room for the Fed to slow down the economy without spiraling the debt interest repayments out of control. February 17 will be an interesting display of strength between the short-term impact of a hostile crypto regulation environment versus Bitcoin's long-term scarcity and censorship resistance benefits. Bitcoin BTC $24,425 price gained 6.3% just 2 days after reaching $21,370 on February 13, which was the lowest level seen in more than 3 weeks. The price recovery can be partially explained by the February 14 U.S. Consumer Price Index data displaying a 6.4% increase in year-over-year inflation in January. Hope you like our video. Don't forget to hit the subscribe button. Thanks for watching our video.